October is a very important month in the markets with gold, stocks, and currencies on the move. Considering that October is historically the most volatile month of the year, you have to be prepared. In this video, I'm going to talk about the biggest financial stories affecting the markets this month and some unique October trading tips that will hopefully help you make smarter trades. Because not only is fundamentals fun, but fundamentals matter. Let's start by talking about Octoberphobia because the phobia is real. And I have a very important trading tip for you to go with it. Some of the biggest market crashes happen in October. Black Tuesday, Black Thursday, Black Monday in 1928 and 1987 all happens this month. These are the days when the stock market lost hundreds and thousands of points in one day. On October 19, 1987, for example, also known as Black Monday, the Dow Jones Industrial Average dropped 22%. Yes, you heard me right. 22% in one day. Investment accounts, retirement funds were decimated. And I'm sure many of you remember, 1,000-point moves in recent history. So the number one trading tip that I have for you this month is to make sure you use a stop, especially for those long trades, because the moves can be much bigger than you'd anticipate. And to consider overweighting the short stock, short risky currency trades, or let them ride and use multiple exits to squeeze more out of the move. Tip number 2. October is a good month to be long yields, long dollar yen and short euro dollar. You may or may not know that. In fact, in the last 15 years, US 10-year yields rose in the month of October 13 times. 5% yields, here we come. While the rise in the yields has not translated into any specific pattern for the dollar index, October is the third worst month for euro dollar and the third best month for dollar yen. Of course, it doesn't always hold 100% of the time, and the US dollar has already appreciated quite a bit, and euro has fallen a lot. But that's where the seasonal patterns lie, and you need to know them, especially when you have odds that are so strong, like yields rising 13 out of the last 15 years in the month of October. For gold, October is typically a negative month. Tip number 3. October is by a significant degree the most volatile month in the market, as you can see in this chart here. And you need to adjust your trading for the volatility. So my trading tip for you is to either trade a smaller position and allow for wider stops, or day trade, get in and out, take your profits and run, because you never know when it's going to reverse against you. Picking the right trade is important, but keeping and managing the profits is a completely different skill that I talk about all the time on YouTube. So check the other videos out and subscribe for more content like this. Tip number 4, buy the October dips for a November to December recovery. While October has been the month with some of the worst market crashes, it's also a turnaround month, a bear market killer, as some people like to say. Basically, it turned the tide in 13 post-World War II bear markets, according to Stock Traders Almanac. Now, there are a lot of risks ahead, so that may not be the case in 2023. But if the Federal Reserve passes on a rate hike at their next meeting and drops their hawkish bias, it could happen. Now, with that said, let's start by talking about some of the biggest things to watch this month. Number 1, the US Government Shutdown. As expected, Congress avoided a U.S. government shutdown with an 11th-hour deal. We should still see an initial relief rally in stocks in the U.S. dollar, but it's important to remember that the deal only keeps the government running for another 6 weeks. They basically bought themselves 45 days to come up with a more permanent solution. But at minimum, it means that right now there's no immediate risk of a U.S. ratings downgrade, and there's assurance that non-farm payrolls on Friday is going to come out as scheduled. Number 2. The impact of student loan payments resuming on October 1st, the broadening auto worker strike, higher energy prices, and tighter lending conditions is going to have a significant impact on the economy. Mortgage rates, credit card payments, anything with an interest rate attached to it is on the rise. When you combine that with higher heating costs that people need to pay for in the winter and more money at the pump filling up their cars, the U.S. and global slowdown could deepen in October. This month kicks off the fourth quarter, which is shaping up to be a rough one. And when you combine that with the seasonal risk of a big sell-off in the month of October, you've got to be prepared for that sharp market correction when it happens. Number 3, It all boils down to the Fed meeting, which begins on Halloween, October 31st. At the last meeting, the Federal Reserve left the door open to another rate hike this year through their dot plot. And the decision, was a surprise, and the Fed told us that it all rests on data. Now, it may be too soon to see the impact of student loan payments and auto strikes, but we should begin to see the effects of higher oil and gas prices and tighter lending conditions, because mortgage rates, yields have been on the rise for some time. So if the Fed raises interest rates or sets the stage for a December hike, when they make their announcement November 1st, stocks will sell off and the US dollar will rise. However, if US economic data weakens and the Fed turns neutral, the US dollar will sell off and stocks could stabilize. Fundamentals matter, and I make it a very important part of my everyday trade. So if you want to learn how to trade with fundamentals and trade with me, get my zip indicator and my other indicators, check out our website, bktraders.com.